Good morning, friends. Welcome back to the episode 4 of State of the Market. Today is 9th June 2022, and today it looks like a negative day for the market as the SGX is indicating. It has hit a kind of 250 lows, 16,250 lows, and it looks like a negative market initially. So, what's in store for today? Let's see. So don't look at this clumsy graph. I'll explain it for you. So initially, in the first part of this live episode, we will discuss what has happened yesterday in Nifty, Bank Nifty, and Reliance. And then we'll proceed to assess how the day would be today. Today is the weekly expiry, and we'll analyze it a bit better because on expiry day volatility will be high. So we need to look at various options on both upside and downside. The market can move more violently than today, or it may stay in a small range. It can do only two things. Either it can move or it won't move. There won't be any option in between on an expiry day, literally. So if option sellers are controlling the market well, the market will be in a tight range. If they are not able to control, then the market will move violently. Now let's see what happened yesterday. Yesterday we opened around the previous day's range or the short-term moving average of 8-day moving average, and then we moved around it. We took a base at around 16,325, which is the level I have highlighted on daily charts. If you look at this, I know it is confusing because there are a number of market areas and zones, but I'll explain it for you. So basically, the small gap zone was under attack for the last few days. If you look at this particular gap zone, the short-term players were continuously trying to attack this zone. So they were trying to kind of support this zone, but long-term players were continuously putting pressure on the downside. That will be visible today. Yesterday, we almost touched the low of this small gap, which is around 16,325. I consider a gap as something that touches the close of this last bar. It should not touch the high of this last bar. It should touch the close of this last bar because a closing price is an official price. A high and low are not official. An open and a close are the official prices. They are used for any kind of MTM positioning or for mutual funds to value their NAVs. So yesterday we tried to fill this zone, but we were immediately rejected because today is expiry. So today what is going to happen? Whether we will break down or we will take support from here. If we look at SGX, it is almost indicating a break of 16,244, which was the level I mentioned earlier. If we break that, there is a fair chance we might go to this level. This is the zone which we need to be very careful. Initially, the zone is between 16,147 to 15,750. When we break this kind of small gaps, we might try to occupy this entire balance zone. In market profile, what happens is there is a lot of liquidity in this particular balance zone. We might try to fill this entire zone. We'll not worry about what happens below this because that cannot happen in a day. So we'll just focus on what are the levels we have to keep looking on the downside. So on the downside, if we open below 16,325, we should immediately look at 16,244 and then 16,147, and finally we should look at 15,951 and 15,955. I will not be negative beyond this because it is an expiry. we might do a kind of 200 or 300 point run. That is the worst case scenario. We should not just assess that the market will fall like 500 or 600 points today unless there is a major event that hits it. So on the downside, these are the levels I'll be looking. Yesterday, we tried a lot. Like if you see, buyers were very strong here and sellers were very strong here. We did not go above 16,550. I mentioned to you that 16,530 is the zone where they have to push through into a balance zone. There is a balance zone here that they could not push. Immediately it was rejected. If you look at the 5-minute chart, you will see the rejection very well. You see that immediately it was rejected and buyers could not push through into the higher moving averages. They could not get into a 50-day moving average, which is a quarterly average. So basically, when they could not do that, what they faced was initially a move down, and we closed near the day lows. So today, what is the scenario? We should open around 16,244, or if we open at 16,325, we should immediately get down towards 16,150 or 15,950 levels. These are the option levels, and there will be a lot of fighting here. And because this is a balance zone, there will be some kind of rejection happening here. So let's look at market profile, what it is saying. Yesterday, you see that we kind of went above the inside day of 7th June. That means we tried to go above 16,530 but was immediately rejected. In market profile, these are called single prints, and these indicate that buyers did not have enough energy to move above this level. If they had gone above 552, if they had broken this 16,550 option barrier, they could have easily gone towards 16,640 levels, which is what I wanted. If they had broken 16,645 on the upside yesterday, or if they can do it today, then only we have the hope of 900 levels. So what do we have at 16,900? Let's go back to the daily chart and see what do we have there. If you see 16,700 and 16,900, look at the levels here. 16,750 and 900 are long-term moving averages. We have to break the 50-day moving average or 200-day moving average. If we can do that, there can be a sharp rally on the upside of even fresh lifetime highs. But that is not happening. We should not be hopeful of such a big move on an intraday basis. For example, today, what you have to focus on is you should focus on this particular zone. Let's change the color so that you have a better view of what is where it can go. So you see this green highlighted zone, this is where we should aim. Either we can be rejected at 16,150 levels, or we can cover this entire range today. Or if we are rejected, we may go back on the upside, and we have to break 16,530 and 16,750 or 640 levels on the upside. That is for Nifty. Now let's look at Bank Nifty. What is happening there? Similarly, in Bank Nifty, we have closed this gap and we are moving around below 50-day moving average. If you look at the key thing in both Nifty and Bank Nifty, we are below 50-day moving average. That means it is negative. However, we should not have a bias when we are going into the market. You should be ready to trade on the higher side as well as the lower side. So if you look at intraday Bank Nifty chart, yesterday, if you look at the video of yesterday, you can see that I highlighted 35,569 as the level where they have to break into for longs to have a continuous rally. You see that buyers got a lot of momentum here. They went fast, but they were immediately rejected above the 200-day moving average. See, they could not spend more than an hour more than 2 hours above this 20-day, 200-day moving average. They were immediately rejected, and that is the reason why we ended towards the lows. I wanted them to close about 35,082, but that did not happen. So it indicated a negative day. However, today being an expiry, we can see some rejection around these levels. You see that again we have a balance zone, and there will be a lot of liquidity around this level today. Let's again highlight it for the ease of understanding. So you see that this particular green highlighted zone, this is the zone where we'll see a lot of buying emerge, and then we can reverse from here. If we break this zone, then we can have a fall almost up to 32,935. I see a lot of weakness in banks because of the RBI's monetary policy, where they are increasing rates, citing inflation. Personally, I feel that the central bank is not considering the productivity gains from information energy efficiency, and they are raising rates unnecessarily. That means they are shooting too much. This is called overshooting of interest rates in economics. If they overshoot, what happens is eventually companies will benefit a lot. Why? Because down the line they have to start reducing the rates very fast, and that's where companies will hedge their positions. They will always have lower interest rates in mind to reduce their borrowing costs. So eventually we'll see a lot of rally as central banks overshoot themselves in terms of interest rates. Naturally, central banks are worried because of the impact of COVID, and that's why they are increasing interest rates. Now, because of this, banks are increasing interest rates, and that is going to be positive for banks. Why I am saying banks interest rising interest rates are positive for banks is banks will never take the impact of higher interest rates. They will just pass on to consumers. Consumers are so resilient in India, or especially in India, because of productivity gains. The salaries will keep rising. That's why they will be happily able to take in the interest costs from the central bank, and eventually consumption will only rebound. So that is on a longer term basis. But for intraday, what are the things we are looking at today is the zone between 35,082 to 32,806. This is the zone where we may get a lot of support for banks, and as long as we are not breaking this swing zone of 32,265, there is a fair chance of a rebound. Let's see what happened yesterday in Bank Nifty. In Bank Nifty, again, yesterday I highlighted this zone. 35,569 is the zone which I highlighted. You can go back to the video, episode 3, and check that I have highlighted that this zone needs to be broken. When we push back into this zone, buyers would have taken a lot higher levels. But once we were rejected, there was a good trading opportunity below 35,311 level. You see that that is where the value area high has formed. This is called this green zone is called the value area high. So once we broke this particular 35,311, you see that we immediately, just a minute guys. Okay, so we'll see what happened there in Bank Nifty on intraday. You see that once we broke 35,311 level, basically it's here, 35,311 level, you see the continuous fall. If you see in our channel, I have continuously mentioned that 35,311 is very important level for Bank Nifty. Let me put 311 so that you will understand what has happened after that. You see that at 311 it tried to stick to that line, but immediately we got a nice 200-300 points of fall. Today, what is the situation? We should not break 35,080. If we open below that level, we can see levels of 34,475 and almost 34,000 levels, because today is weekly expiry and Bank Nifty moves a lot on a day like this. If we break this zone, we will be hitting towards 33,429. But this all may or may not happen in a single day, but we should be ready for a major move today, as option premiums will be very high because of the event. Yesterday was RBI event and today is expiry. So probably a lot of volatility would have ballooned option premium prices, and today they will try to take advantage of that to deflate that balloon. So that's it for Bank Nifty. Let's look at Reliance, what is happening in that. Yesterday, as expected, Reliance broke below 2750, but there was not much momentum on the downside, because below 2750, I expected Reliance to break down a lot, but that did not happen. That shows buyers are still controlling the option, supporting the price here. But once they give up, the price may fall towards its 200-day or quarterly moving average. If you see, Nifty and Bank Nifty are below quarterly and 200-day moving averages, and Reliance is above them. Either Reliance should come down or indices should go up, because Reliance has the biggest control on Nifty. That is the reason why I am very negative on Reliance. Once we break this trend line, that is, once we break this short-term moving average, this green one is 8-day moving average. Once we break that, we will start looking at 20-day moving average, and then quarterly moving average, and then the 200-day moving average. You can see the freak high or freak low that has formed to cover all the moving averages. Basically, that day, a large player would have taken all the stop losses that are lying in the order book. That is the reason why you see such a clumsy and awkward candle. This should not have happened. Now, let's go back to the market profile graph of Nifty and see if it is giving any hints for today. So basically, you see that we closed right at 16,355 near the 16,325 zone. So today we have to, if we open as per SGX, if we open around 240 levels, we need to push into upside, that is around 16,325 levels. We have to push into the market. If we are rejected at 16,325, the downside levels that I have mentioned here are imminent. Keep 15,951 and 16,147 as the levels that we can visit. In Bank Nifty, similarly, we will see what should happen in Bank Nifty. In Bank Nifty, the structure is a bit different, because if you look at the profile yesterday, if you carefully look at the profile yesterday, this is the kind of poor structure Bank Nifty has formed. Basically, I would never want a structure to be poor like this. Basically, a profile should be something complete like this. Whenever a poor structure like this is formed, the market tends to fill this zone either today or tomorrow or some other time. That means there is a high possibility of the market moving in this particular zone. What is the zone I mentioned? Just a minute. Let me open the tools and see if I can give you a picture of where it can move. I'm just looking for a rectangle. Basically, if you see, this is the zone the market should move between. So basically, this is the zone the market will have to move to repair this poor structure. It can happen today, because if you look at SGX, it is still indicating a downside, but in pre-open, we can come back and open at higher levels, or we can open at lower levels, and we will try to test to move into this zone. In Nifty, we do not have such poor structure. In Nifty, we do not have such poor structure. It is decently good. Even here, you see that if we get into 325, this is the level we will be moving. This is the particular level we will be moving. Just a minute, guys. Let me rearrange the TPO chart so that it is easy for you to remove the split. Not able to remove the split. So basically, we should move in this zone. We should move in this particular zone. We should break 460 and 530 to fill this particular core structure in Nifty and Bank Nifty. If it does not happen today, if we are moving towards lower levels in Nifty and Bank Nifty today, tomorrow on Friday we'll come back and try to fill this structure. If not now, later when the market comes back, if it goes all the way towards this lower part of this balance zone, it may come back and repair this poor structure. So as a market profile trader, you should note these zones and be ready when the market comes there, because these are the zones where the market will spend a lot of time. If you see, this potential is almost 300 points. If we break into this zone, the market will try to slowly absorb all the liquidity that is pending here, and we will end up filling that zone. That is one of the opportunities for positional traders. So let's see what is happening in SJX and then close for the day. Yeah, we are almost trading near 16,284, and the low for the day is somewhere around, it should be around 16,244. Just a minute, guys. The low for the day is around, just a minute. So this is a daily chart. Let me open the 5-minute chart. See what has happened. You see 16,244. I have mentioned 16,244 as the level in the channel, and you see there is a slight support happening. So this is a key hint you have to get into the market with. So in market today, what we can see is we may get some support around 16,245 levels, 244 levels, and we may push into 325. If that does not happen, we will start breaking down below 16,244 and hit 16,147 and 15,951. So those are the levels you have to keep in mind. In Bank Nifty, you should be very careful because there can be a large move today because of the post policy adjustment in options. That's it, guys. If you have any doubts, please contact me on Telegram. The link will be in the text section of this video, and have a great day.